Hi, welcome to this video on how best to extract funds from your limited company. There are 5 ways to take funds out of your limited company: salary, repayment of expenses, dividends, director's loan or pension contributions. As a contractor, you'll want to minimise tax, maximise cash and maybe even leave some funds in the company. Salary payments will save your company corporation tax. You too can also utilise some of your personal allowance depending on the salary level you choose. Assuming your salary is above the national insurance threshold, you'll have a qualifying year for state pensions. Employing a second person will also save you corporation tax and allow you to claim the employer's allowance for national insurance. But remember, a second employee could trigger the need for auto-enrolment and a company pension. We can advise you on this. Any expenses you incur personally on behalf of the company can be repaid to you without any implications for your personal tax liability. They will, however, save your company corporation tax. As the owner of your company, you can also receive a dividend, assuming your contract is outside of IR35. Dividends are paid out of your company's taxed profits. For 2017-18, your first £5,000 worth of dividends are completely tax-free. Any dividends above this amount will be taxed at the income tax rate that applies to your overall earnings level. Dividends are tax efficient. They attract lower tax rates than other sources of income and they don't attract national insurance charges. Pension contributions paid through your company will save you corporation tax and give you a savings nest for the future. Up to 25% of your pensions pot can be taken tax-free on retirement. If you want more advice on pensions, we're happy to talk this through with you and introduce you to our pensions advisors, Contractor Wealth. As a director, you can borrow money from your company. The most common form of loan is a travel loan for a season ticket. The expectation with these loans is that they'll be repaid during the year. You should consider carefully taking any other sort of loan from your company. There can be tax implications for both you and the company. If you borrow more than £10,000 from your company in any tax year, you'll need to report the loan on your P11D, especially if no interest has been charged on the loan. Your company will also have a national insurance bill to pay on the value of the interest that you haven't had to pay. If your loan from the company is outstanding 9 months after the company's year end, the company will have an additional corporation tax to pay of 32.5%. This money will be repaid to the company once you've repaid the loan. Please be aware that if you write the loan off, you will have to pay personal tax on the value of the loan. Your company can, however, then reclaim the extra corporation tax they've paid. If you've left funds in your company and close your company down, you'll pay capital gain tax on the final distribution. The rate of tax will be anywhere between 10 and 28%, depending whether you qualify for entrepreneurs relief. There is an annual allowance of £11,500 for 2017-18 for tax-free capital gains. I hope you found this brief video useful. If you want more information, take a look at our website and the Resource Centre.